Good evening, everyone. Thank you for joining us this evening for our very first edition of Terrazzo Talks here in Dubai. I would also like to extend a very warm welcome and greetings from Dubai to all our viewers from other parts of the world. I'm Lovraj, the Managing Director of the Terrazzo Group. We have with us today two eminent panelists for our opening session, Mr. Vince Cook and Mr. Andrew Mortimer. I have the pleasure of introducing Vince, who's the CEO of the National Bank of Fujairah. Vince has led NBF's transformational growth as one of the fastest growing banks in the UAE, with specialized focus in trade finance, treasury, and corporate banking. Vince has been my long-term friend and has been in the banking sector for the last 35 years, almost as long as I've known him. Vince has held very senior positions across the sector. We are indeed privileged and proud to have a person with his experience for our opening session today. A very warm welcome to you, Vince.
Thank you, Lovraj.
I would now like to hand over to my co-moderator, Yuvraj, who is the Business Development Director of the Terrazzo Group, and will be introducing the second panelist, also a very dear friend of mine, Andrew Mortimer.
Thank you, Lovraj. Thank you, Lovraj, for that introduction. My name is Yuvraj Talwar, and I'm the Business Development Head of the group. I'm extremely excited to be here with all of you today on this inaugural edition of Terrazzo Talks. The purpose of this show is to engage with distinguished members of our business community and answer and discuss some very relevant and important questions in today's incredibly challenging economic environment, which we all know about. Today, we have two phenomenal panelists in Andrew Mortimer and Vince Cook to help us do exactly that. Andrew is the Chief Operating Officer and Country Manager for Barclays in the Middle East. Andrew has bolstered tremendous responsibility over the last 3 decades, holding several other high-level positions in global institutions in SRM Global Fund, UBS, Credit Suisse, and Nomura International. He is also Deputy Chairman of the British Business Group, and the list really just goes on and on. Welcome, Andrew, to the very first edition of Terrazzo Talks. We're so incredibly lucky to have both you and Vince with us here today. Thank you for being here.
Thank you for the invitation.
So the topic of today's discussion is the much spoken about Dubai economy and what we can expect in the build-up to the Expo 2021 and beyond. So I'm just going to take you guys through the format of today's talk, and that will be we will pose 5 to 6 questions that we believe will bring to light some very key issues surrounding the UAE economy, and we will then open up the floor to the audience to express and send some of their questions into us, which we will then in turn pose to you, both Andrew and Vince, to get your thoughts and views. With a little further ado, I'd like to begin by asking you the very first question, Vince. Vince, would you agree that the UAE's handling of the outbreak and other external factors, such as the Hong Kong protests, the bleak economic environment in Europe, the political unrest in America, further cements the UAE's place as the continent's financial hub? And with that, I yield the floor to you.
It's always good to start a session like this with the simplest and most narrowly drawn question, Yuvraj. Thank you. I think the UAE has been considered, I guess, the region's financial hub for, the best part of several decades, at least 2, if not 3. I think you have a situation now where this idea of can we be a financial hub is sort of quite well behind us, and it's well accepted that is the reality. And you've seen it with external recognition. So DIFC in particular is rated a top financial center in the Middle East, Africa and South Asia, which is quite an achievement. And I think as a whole, we're looking at something like 8th globally in what is called the Global Financial Center Index. So, the place is a world-class player. And it's really a question of where do we go from here and how do we build on this platform? And I think the inherent advantages that have been developed over sort of recent times are not going to disappear in the face of the recent current global crisis. And we can but hope that actually those inherent strengths that have been developed will create the sort of ingredients that we need for a fast recovery. I think there's always two elements, the sort of software and the hardware, and I think there's no question the professional competence that exists now in the country is world class, and I don't think anybody questions the quality of the sort of hardware aspect, the physical infrastructure. And I think when you marry those things together with a general openness and tolerance to all manner of people with all manner of backgrounds, we have a uniquely diverse demographic position. There's no country in the world which is so dependent upon expatriate relationships and working population. And we have an incredibly entrepreneurial mindset at the highest levels. And I think when you look at that and you end up with a very strong action orientation at the very top of the country, things get done here much faster than you see in many other parts of the world. And I think we all benefit from that. And we all know, how that can work in our favor. Obviously, the country's response to the recent outbreak fares better than most. So I think that can only help but build on this strong position that we already have. And I think the government has been quick to act when it's seen things not working to plan. So inevitably, as you get into a situation which is evolving and evolving fairly rapidly, your initial response is not always the right one. But here, more than anywhere else in the world, I think they've sort of made an announcement and within literally a day or two tweaked that announcement in order to make it more practical or more directed, more targeted, more effective. And I think that sort of ability to react like that and adapt to evolving circumstances will just make this place a very strong contender in whatever it decides to do.
Thanks, Vince. Andrew, do you have anything to add to that? Do you have any comments?
Yeah, I think just building on the points Vince made at the very end there. I think when you're looking at financial hubs or financial centres, effectively you're looking to attract investors in whatever shape or form that is, because the banks will follow the investors, in many respects. And I think if you look at how the leadership have dealt with this crisis, which is a social crisis, it's not an economic or a financial one. There's ripple effects off the back of it. It's a social crisis. I think what they have ensured and maintained is that sort of confidence and trust and stability during that crisis period. And I think to Vince's point, they've adjusted and tweaked where it's been required. And I think if you're looking to position yourself as a commercial hub, financial hub, that confidence and trust, I think, is and stability is key. And I think the leadership have done a fantastic job in navigating through that in a very successful and effective way.
Understood. So I think I just like to play devil's advocate here just for a minute, if I may. I think a lot of people watching may be saying, well, there's a lot of people leaving. There's an exodus of expatriate population. Well, there may be, as flights open up and as channels of travel open up back to the home countries because of job losses and so on and so forth. I think without question, I think we can all agree here that in the short term, there will be some pain pretty much across the board. Do you see that pain being long term, or do you think we will get over it in the short to medium term?
Again, another simple question. Thank you, Yuvraj. I think when I look at it from if I come much closer to home and just look at it from the bank's experience. So we're a business bank, so we don't. I can't speak really for what's happening yet in the retail sector so much, but on the business side, we saw a fairly immediate reduction in just economic activity in the widest sense coming through the bank, whether that's payments, whether it's trade, letters of credit, treasury activity, everything. And that, I guess we were looking at something like a 40% drop within a very short space of time of going into our local lockdown. And then you started to see quite a big variation across different industries. So some industries actually came back almost immediately, and then other industries are still, we're still not seeing any sign of change. But overall, at the aggregate level, we've recovered to something much closer to 10 to 15% less than sort of pre-COVID normal levels. That to me is a great encouraging factor. So there's a huge resilience in that, and you're not really seeing that in other countries yet. And I would add to that in some areas we're already back to sort of pre-COVID levels, and even in one or two areas, such as the dealing room, because of high gold prices, relatively stable oil price, but some interesting movements in stock markets and currency markets. Actually, our volumes of trading are actually higher than they were pre-COVID. So I think we have the environment here that can recover quite quick. The biggest question is what happens in other markets, because the UAE is an entrepot, it's a regional hub, and the pace of recovery is very dependent upon our counterparties. And if they're all able to avoid any large-scale second wave, then actually we can continue to build off of this quite strong base. But that's not what we're yet seeing. We're not seeing that level of confidence in every market. And it's a very important factor when you said at the beginning about Expo. When you start to think about Expo, it's not really a question of the conditions on the ground in the UAE, although that's important. That's only one factor. And the second most important factor after the sort of local confidence is what is happening to those countries that you want to attract into this market. And if people want to come, Dubai will definitely put on a great show. But if you're not allowed to travel, or you don't have the confidence to travel, then it doesn't matter how good that show might be. It will be an issue. And I think it's still too early to say quite how that's going to pan out.
Yeah, I think that's a very fair response. Andrew, do you have anything to add to what Mitch just said?
Yeah, look, I think it's, if we talk specifically about Dubai and not the UAE, I mean, Dubai itself is not just a regional hub, it's a global hub. So if we look at the activities around which, to a large extent, the economy is based. I mean, you're looking at tourism, you're looking at aviation, you're looking at logistics, retail, and then you've got the whole sort of real estate component off the back of that. And I think that's where the sort of global macro conditions will be a challenge for a location like Dubai. I mean, it's very clear the global economy is going to shrink. So the estimates are it will shrink by possibly 4% this year. And if you look at recent, the UK announced its second quarter GDP yesterday, and the economy contracted by just over 20%. That's a huge number. And so off the back of that, that's going to put pressure on some of the key markets for a hub like Dubai. And if we look at Europe, if we look at the US, we look at Asia, all of the big economies there are going to experience a contraction in some shape or form. And that will impact that global hub element that Dubai relies upon. But I think underlying that, there is a strong resilience. I think Dubai has always proved itself to be very agile in its ability to adapt and adjust very quickly. And I think that will come through. And I'm sure recovery-wise, Dubai will be one of the locations that recovers at a much faster rate than many of its counterparts, which is the positive.
Absolutely. I think you hit the nail on the head in the sense that you said resilience, and it gives us an opportunity, us being Dubai, to prove our resilience economically. Given our youth, would you think that we have something to prove to the rest of the world that our economic model is sustainable? In the past, there have been many questions surrounding the sustainability of our economic model. Do you think that 2008 gave us an opportunity to prove everyone wrong? Do you think this is another such opportunity?
Look, I think yes, for sure. I mean, Vince touched on the point about sort of the entrepreneurial, sort of spirit that exists here. And I would argue, Dubai is a very, very commercially minded has a very commercially minded demographic, and so you've got everybody's has got that sort of business acumen where the need to change is clearly understood, and the appetite to change exists, and so as a consequence, people will very quickly see the opportunities that spin out of this, and will look to take advantage of those. And I think the fact that you've got a public sector as well, in terms of the sort of the government authorities here and the government agencies here, are in that similar mindset. They're able to adjust and adapt things very quickly also to bring both the public and private sector together to drive Dubai forward. So in answer to your question, yes, I think Dubai is very well positioned.
Yeah, great. So just going off that for a second, I just want to make a small comparison between Hong Kong and Dubai specifically. I think historically, Hong Kong's autonomy and progressive legal framework made Hong Kong a very attractive place to be. So much so, Hong Kong currently has the highest concentration of banking institutions in the world, which I'm sure you know. But the new legislation coming through China gives Beijing obviously extensive powers to reshape life in the territory, far beyond the legal system. So to add to this, obviously there's been the civil unrest in Hong Kong recently with thousands of protesters out in the street. This will obviously force potentially financial institutions, businesses, professionals to rethink their current geography, being Hong Kong, and potentially relocate. How attractive of a substitute do you think Dubai can be? Can Hong Kong's loss really be the UAE's gain?
I'll answer that first and I'll hand over to Vince. Look, I think the reality is, my personal view is, I think Singapore has already beaten Hong Kong in Asia. If you look at the build out of the private banking wealth management industry in Singapore, I mean, Singapore has been incredibly successful in the build out of its wealth management business, and its financial services, sort of the financial services ecosystem that's around that. But the reality is, there's a time difference between Singapore and Dubai, and there's a time difference between Dubai and locations like Geneva and London. And I think at the moment, there's nobody in that sort of time zone slot between Singapore and Geneva / London who's sort of filling the gap. And I do think Dubai is very well placed to take advantage of that. And I think, Vince touched on it earlier. If I look at the Dubai International Financial Centre, the DIFC, the free zone, it's incredibly successful, or has been incredibly successful. You've got an authority who understands the business. You've got a regulator who understands the business. You've got a legal framework which is basically aligned to England and Wales company law, which is respected and understood globally. So all the ingredients are there, to attract really whatever fallout there is from Hong Kong, but also to take advantage of whatever opportunity is time zone wise to establish something within this time zone between Asia and Europe.
Yeah. No, thank you, Andrew. Thank you. That makes a lot of sense.
I just want to add one word to this. Dubai, I often describe Dubai as a trampoline. You jump, it goes down a little bit, and you go up much higher than you ever were. Each time I've been here for several decades, and I've seen this happen time and time again. Dubai always comes out higher and on top of everything, always, in spite of all the difficulties that may surround us. That takes us to the next question, which I'll pose to Andrew. Given our reliance on real estate and tourism and trade as the bedrock of the economy, so to speak, how do you see things evolving in time to come? How do you see these two industries performing in the UAE? Over to you, Andrew.
Look, I think it's a tough one. Look, if I look at the impact on the economy, and arguably you could say, the Dubai economy was already soft leading into COVID, and then COVID hit. I think there's significant pressure on the banks. both the international and local banks. I think all of them are already announcing either in their Q1 or their Q2 results quite significant impairment charges. That's going to have an impact on the credit appetite of banks. And when you have an impact on the credit appetite of banks, that's going to impact lending. And it's going to therefore, organizations are going to be far more focused and far more selective as to basically where they're going to lend cash and really those sectors that are offering more or less risk. And I think the risk sectors, there was a McKinsey report I read at the weekend, and it said sort of the key risk sectors McKinsey see across Dubai and the wider Middle East region is sort of passenger transport, hotels, tourism, non-food retail, and real estate. And the sort of probability of default in those sectors is multiples of where it was 6 months ago. And I think that is going to have some impact, Lovraj, in terms of those sectors and the sort of the growth prospects for those. But coming back to Dubai is very agile and things can change very quickly. And as a consequence, they could rebound very quickly. But I do think the macro conditions, I think the banks being far more selective in where they're going to be providing credit moving forward off the back of the sizable impairment charges they're taking, I think it's going to make it in the short term quite challenging for those sectors.
Thank you, Andrew.
Vince, what have you got for us?
I can't disagree with Andrew. I think that for sure we're going to see some further gyrations in price and valuation in the real estate market before they settle at sort of the new equilibrium. And because the developments that we see around us far exceed the requirements of the domestic population, it's very much driven by investor confidence and the interest that people have to be, one, in the region and two, in the UAE. And so then you start to have to think about how quickly will sort of globalism, globalization type desires, how quickly they're likely to return, or are we going to go through an extended period of isolationism and people wanting to stay at home? I actually don't believe the latter. I think we've all been at home far too long already, and we're all desperate to get out as fast as possible. And if you think about that in a Dubai sense, then actually that harbors well for tourism. And they've done a great job. I mean, I've just come back from the UK, it was far easier to get through coming into Dubai, and getting through the airport, getting places organised, flights organised, everything, than it was going back the other way. But again, it is very much dependent upon what is happening in other countries. We're a long way from sort of any clear sense of how this is going to evolve, but I don't see it as a negative in the long run. I just think we are going to go through some difficult situations before we get to clear water.
Yeah.
Sorry, Yuvraj, one point I just wanted to add. I think another positive that we haven't touched on yet is the weakening of the US dollar. That will help Dubai. And from an asset perspective, it will make Dubai assets cheaper, for overseas investors. So, I mean, the US dollar has depreciated by 10% since COVID, since March. And that with the presidential elections destined for November, you could argue there's going to be an increasing weakening of the US dollar, which is going to therefore make assets in Dubai appear cheaper than they were 12, 18, 24 months ago. And that may attract investors into markets like some of in the real estate sector and some other sectors where they just say, actually, look, prices now actually look better value, if for no other reason I'm taking advantage of the exchange rate movements.
Yeah, right. No, that's a really good point, and we hadn't touched on that. I just want to draw your attention real estate for a second, specifically real estate. We've known about this oversupply, and it's been commonly spoken about for quite a while, even pre-COVID. Do you think sort of price drops, there's been no secret that prices have been dropping exponentially over the last 3-4 years. So price drops, lower lending rates, and sweetened sort of LTV rules may encourage some potential buyers to make a purchase when they otherwise may not have. This, I guess, coupled with the Expo and an influx of population, spending population, potential investors, do you see the combination of these two things sort of propping up residential property prices going through the next sort of 1.5 to 2 years?
Yeah, I guess I go back to sort of some anecdotal pointers that sort of existed before the pandemic, and they all point to sort of regional sentiment. And if regional sentiment is quite buoyant and believes in the future, and at the same time believes that a bottom has been reached in the market, then you will see quite a reverse in the flow of funds. So, I used to have a Saudi landlord, and he was in quite a significant senior position, and he said, finding 250,000 Saudi buyers for real estate in Dubai is not actually a big issue. It's only driven by price and confidence in where the market is. And when you sort of think about that in the context of this oversupply we see, actually the oversupply isn't anywhere near that number. So the opportunity does exist to attract people to this place. It's just, when you look at it from within Dubai, we look at it from a Dubai context, and you think, well, if there are only X 100,000 nationals, how the hell are we going to justify having this level of real estate? But of course, that's not the market. The market's much, much bigger than that. And it's just about how do you create confidence in the market, a feeling that we're not going to get, if I buy now, I'm not going to lose my shirt because the price drops tomorrow. And the sense of, what I buy, I know what I'm getting, and it's going to be mine. And, it's not sort of subject to any legal type challenges or any concerns on that front. And I think the country's made quite a good progression in that sense. But what's missing at the moment is this feeling that we've reached a bottom. We're still not quite there yet.
Yeah. Good. Anything else anyone wants to add? Lovraj, Vince, Andrew?
Look, I think it's building what people want as well. So there's been this sort of shift now towards more affordable housing, where and encouraging individuals who are working here and actually see themselves working here in the medium longer term, basically rather than to be tenants, actually to be owners of their property. And I think that we will continue to see that, hopefully see that steady shift where people are encouraged rather than to be subject to being a tenant with a landlord. Actually, the facilities made available to them, and the affordability is there where they can buy their own property. And I think, to Vince's point, have the confidence that what they buy is theirs, and theirs for as long as they want it.
So would you say that the new visa rules, the 10-year residency visas, that all plays to exactly what you're saying? Do you think expanding that beyond sort of professionals would be a worthwhile measure for the government to institute?
I would say yes, definitely. Yeah, it's better. I talked about early on about people looking for security, looking for stability. They want confidence. If you have those sorts of visa mechanisms in place, it gives you that security, it gives you that confidence, it gives you that stability, and then with that comes the appetite then to invest. Without that, you're more hesitant.
Yeah, understood. You agree with that, Vince?
Yeah, absolutely. I think it's still, even in some cases where you've got some developments have different rules around how they handle the freehold rights, and I think that just complicates the situation. And whilst it's great to have this sort of competitive streak amongst different developments, and everybody trying to find their own little angle to make their place more attractive. There needs to be a very strong, very consistent, very robust sort of legal base where the minimum standard is clear to everybody, and everyone knows exactly what they're getting. That's, as I say, we're making good progress in that direction.
Absolutely. So I guess that's more regulatory, if I'm not mistaken.
Yeah, and I think different developers have different ways of managing their developments, and again, I think some of them are sort of less balanced, shall we say, than others, and you just have to at the moment, that I think is a weakness in developing the market as a whole. I think there needs to be a minimum standard, and that everyone understands before they go in and buy something.
Yeah, no, absolutely. So just a quick question to you, Vince, then, just following up on that. So the question that Lovraj read out, I guess, stated trade, tourism, and real estate as the bedrock of our economy. Do both of you believe that the pandemic has highlighted a need for the UAE's macroeconomy to further diversify than how much it already has? We've constantly got credit for having a diversified economy, so to speak, at least in the West. Do you think that the pandemic has highlighted our need to diversify further?
Yeah, I think because the economy is sort of far exceeds the sort of true domestic element of the economy is dwarfed by the sort of cross-border elements. Whether it's Emirates, whether it's Jebel Ali, whether it's the shipping, whether it's the oil. These are all global matters. So you have to constantly look at, okay, what else can work in that sort of environment, and how does Dubai and the UAE generally punch above a relatively small local base. And I think this move into knowledge economy, IT related development, AI, even space exploration, and even interestingly for a major oil exporter, becoming one of the world's leaders in solar power generation. I think these are all things where you can do that from a very I guess a sort of narrow manufacturing base, but very, very strong intellectual base, and you don't need vast numbers of people. So I think, those things are happening already. I don't think anybody's sitting on their laurels. I don't get the impression that anybody in the authorities is saying, okay, we're happy with what we've got, let's just keep it this way. That's absolutely not the conversations we're having.
Yeah, well, that's really good to hear. That's super to hear. I'm sure everyone's very happy hearing that. Andrew, anything to add, or should we move on?
No, nothing further to add, no.
Okay, cool. So then the next question, again to you, Vince. Do you think business conditions across the region will recover evenly? We've seen, obviously, very different responses to the pandemic and very different legislation put in place. Do you think economically regions or states will recover evenly?
No, but I don't think that's sort of because of the pandemic alone, but more to do with the relative advantages that already exist across the region and in different countries. And it touches on social considerations, the structure of the economy, what else is going on in the neighbourhood, so multiple other things really. And I don't think you can. Whilst the crisis is, as everyone says, unprecedented, it doesn't change the fundamental reality of what ingredients you have to deal with, or to use a gaming analogy, what cards you've been dealt. And I think everybody's been dealt a different hand. I think the UAE does do a particularly good job of making the best of the hand it's been dealt, and we're fortunate we've got a strong set to play with. Others are not quite so fortunate, and will come out of this differently. But I think the the openness that we have here also helps you become much more sensitized to where, if you like, the next big opportunity comes. So there isn't a sense of, okay, we know everything we need to know, we'll just get on with our lives. That's not how we operate in the UAE. This is a very open environment, and you can sense what's going on in other parts of the world and what's interesting and what might work here, and then develop it very quickly here. So I think as long as we keep that and the world doesn't go back to this, or doesn't start taking a much more isolationist approach, and we don't get driven into taking sides between the US and China and all of these sorts of big issues, then I think we will progress very well. And if we progress very well, then certainly some of the neighbours also benefit. But will the neighbours come out as strongly? That's entirely down to what they do with their set of cards.
So just to add to that, I think globally we've seen on a very macro level, fiscal and monetary policies being implemented to sort of bolster the economy. On the fiscal front, I think large stimulus packages have been injected into the economy globally. Dubai has extended direct support to businesses, including sort of reducing government fees and utility bills. Mall operators and commercial property companies, as well as the sort of city's financial district, have offered rent relief to tenants. Much needed, may I add. In addition, the UAE's direct financial stimulus equates to around about, from the figures I have, to around 2% of GDP, compared with 5% of Bahrain and around 12% of Singapore. And I don't have the percentages of the US or the UK. How do you see this affecting the UAE's economic revival? Do you believe they're spending the money efficiently? Do you think we need more of a direct fiscal stimulus? And can you comment on just a couple of the other states within the region? Andrew, Vince, whoever wants to take this, go ahead.
I can take it first if Andrew doesn't mind. What we've seen has clearly been helpful. When compared with other markets, we've not seen the sort of job protection schemes in the same way, and we've not seen sort of direct injection of funds. So what has happened here is obviously the government has done what it can with the things which are direct government revenue oriented. So as you say, they've waived fees, reduced rents, etc. And I think that's clearly a significant help. I think if you look at the discussion in the countries that did have things like the job protection schemes, the furloughing structures, like the US, you can be redundant now and make more money than you ever did when you were working. Some quite extreme situations. I don't think that was necessarily the right thing for the UAE anyway. And there was a lot of pushback in the countries, including in Europe, that were doing that, but particularly from the economists, saying that actually all you're doing is deferring the inevitable, and actually you do need to right size eventually anyway. And if people are being employed in jobs which are no longer required, the longer you keep them in those jobs, the harder it is to recover. And I think, so obviously at the time, if you're one of the people being laid off in the UAE, that's no consolation. But I think in hard-nosed terms, the quicker you deal with a difficult situation, and if somebody's in a job that is no longer required, the quicker you move on, the quicker you will recover. And I think that's the trade-off which we're seeing very clearly pan out across the world. And it will be very interesting to see what the end result turns out to be. But I do believe that a quick response and dealing with things as they arise is the strength of this country. And people will quickly come back when the jobs are there to do. But why keep them here if there aren't any jobs?
Fair point. Fair point. Andrew, anything to add? What do you think?
Yeah, look, I think I don't think you can't compare it's very hard to compare the UAE to other countries around the world, because the UAE is quite unique in terms of, from a population perspective, 90% of the population are expats, are guests. And so, to Vince's point, whereas in the UK, there was a very aggressive agenda from the government and the UK Treasury to sort of, protect and furlough employees and protect small and medium-sized businesses. It's much harder in a location like the UAE, where, as I say, a sizable percentage of the population actually are guests. And if the work isn't here, but better you put in place the facilities to allow them to return to their home nation, rather than keep them here and basically delay the inevitable. So as painful and cold as that may sound, what you have to ensure, though, is that you do provide the facilities for people to be able to repatriate in a way which is comfortable for them. But the tough decisions also have to be made.
So just going back to the original guest question, Andrew, do you think that regionally countries will recover evenly? Meaning, I guess what I'm trying to say is, do you think we're in the best position to make a sort of V-shaped recovery relative to the other economies that surround us in the region?
Yeah, I think the UAE is in a very privileged position. Abu Dhabi has one of the largest sovereign wealth funds in the world through the Abu Dhabi Investment Authority. It also has Mubadala as well as a sovereign wealth fund. I think ADIA is sitting on about $1 trillion worth of assets, which many European countries would love to have in their war chest and at their disposal. So, I think the UAE is in a privileged position. As a consequence, I think it's much better placed to recover at a faster rate. And I think also coming back to that sort of population demographic as well, it has the ability to quickly adapt itself and right-size itself to then drive forward. If I look at other countries in the region, Qatar, likewise, very strong sovereign wealth funds, very strong banking system there as well, and likewise Kuwait. I think Saudi is going through a huge transformation program, which is going to require significant investment. And I think Bahrain and Oman, I think the situation there is more challenging. But I think if you look at the GCC as a whole, the UAE is definitely in a very, very strong position to come out of this quicker than the others.
That's what we like to hear. So I think we can move on to the next question. So Lovraj, if you have that, go ahead.
Okay, so the next question: will the economic shock caused by imposing lockdowns prove more costly than the pandemic itself? It's $1 million question, isn't it? Andrew, would you like to start with that?
Look, at the outset, I said, I made the point, the pandemic was a social crisis. And it's one where, at the end of the day, what is it that populations are looking for from their leadership? And what populations are looking for is the well-being and safety of the individual. And I think as a consequence, that around the world, different countries made different decisions. And on many occasions there have been difficult decisions, but the social interest was front and center of what drove those. I think the economic impact, this is unprecedented. So none of us have experienced this before. So it's very difficult to model what we think the economic impact will be. I do think there are some genuine concerns. If you look at some of the steps that governments are taking globally, you've got the slashing of interest rates, you've got quantitative easing where governments are buying up government debt and corporate debt as well. You've got sort of a pumping of liquidity into the banking system, which is then hopefully being passed further down in terms of into corporates and the SMEs and the retail sectors. But all of that comes at a cost. And I think the economic cost of that is as yet unknown. But we're already seeing increases in unemployment rates around the world. That's going to have an impact on consumer demand. That impact on consumer demand will then start to feed through into sectors like tourism, hospitality, non-retail expenditure, and so on. I think all of which will take time to work through. So to answer your question, I think the economic shock is going to be material globally. I think the global economy is expected to shrink by 5 to 6% this year. I believe that's one of the most dramatic reductions in history. It's set to recover supposedly in 2021, but the recovery is really dependent on a vaccine as well. And until there's a vaccine, there's always going to be that uncertainty. And where there's that uncertainty, you get the volatility. And where you get the volatility, there's a lack of confidence, or people will tend to hesitate before committing. So I think the pandemic, decisions have to be made from a social perspective, but I think the economic impact is going to be material. And I think globally, I think will go on for some time. But it's very, very hard to model because it's unprecedented.
Have you, Andrew or Vince, been surprised at any of the, every country sort of handled the lockdown and the policies behind the lockdowns differently? You see Sweden, who's had a very laissez-faire sort of approach to the lockdown, who hasn't really imposed a lockdown, I guess in the interest of keeping their economy stable and not letting it affect it. Whereas other countries such as the UAE had imposed a 24-hour lockdown for around about a month. Both economies have suffered. I'm not in a place to comment on which suffered more, but have you been surprised at how a lockdown has affected the economics of a country more or less than you must have initially expected globally? I'm not just speaking about the region here.
Do you want to go first, Vince?
I don't know. I think it's a bit early. I think it's still quite early in the piece. We're talking as though it's over, and yet globally the number of infected people continues to increase. So I think we forget that we're sitting in an exceptional part of the world where recoveries have exceeded new infections for a couple of months now. That's not true across the bulk of the world. So I think it's going to be a long time before we can truly assess what has worked better in terms of response, what we should never have done, and I think going back to Andrew's point, it's not really a mathematical problem at the end of the day. For sure, it's not a simple calculation. There are far-reaching, significant political, social, cultural elements, and the whole thing touches some really deep sort of issues and beliefs about how do we value our lives. And you only set aside an hour, so I don't think we'll go down that path. But we're still in a situation that continues to evolve. So I think I feel incredibly sympathetic to anybody faced with trying to decide how much we can afford to spend to reduce human suffering. I mean, that's just not a question many of us have to or want to face, but that's the reality. It's also not static. So we've had at certain points in the period, we've seen amazing results in certain countries. So New Zealand, I guess, is one of the latest, where they managed to deal with it seemingly very quickly. They're feeling very pleased with themselves, and then all of a sudden a new infection arrives and they have to go back to square one and work out what to do. So we're not yet at the point where we can evaluate anything really sensibly. I think we may never know. We just have to try and improve and learn from the experience about what works, develop more rapid response, greater ability to adapt, not be so surprised when it happens the next time, and just try and keep people as safe as we can and keep the cost under control. But these are broad thoughts that really don't help at the moment, and you just got to take care.
Sure. Yeah, so I think that's a valid response. So I think we are up to our last question now. We have one more question to go from my side, and then we will open up the floor to the audience. So I request everyone in the audience to send in as many questions as they can so we can squeeze them in. in the next 15 to 20 minutes or so. We've got quite a good response so far. So get ready for the challenge, guys. But my last question is, the UAE has always been front and center of adopting new technology. I think pretty much anyone who has visited the city or knows anything about Dubai knows that. Do you believe the pandemic will accelerate the adoption of various digital new technologies and various functions across industries? However you'd like to answer is fine. So how so, if your answer is yes, and why?
I think we're already seeing this. If I look at say the adoption of things like online banking, host-to-host activity, the use of apps in banking, all of these sorts of things. This has all accelerated in the last 3 or 4 months. So if I just take a look at our payments business, we were looking at maybe 70–75% of our payment traffic now consistently using digital channels. Within the space of 6 weeks, 6 to 8 weeks, that's moved to 90% plus. We were probably thinking it might take us another 2 or 3 years to get to that level, and it's just happened. And I think people's openness to adopt a different approach is what we were missing before. People wanted to stick to the sort of tried and trusted routine, but they didn't work as soon as they worked from home. And so that change forced everybody to adopt new things. And so, you know, some of these digitalized services and such like have suddenly become, you know, very popular, very normal. Everybody seems to be at home with them. And it's, yeah, I mean, from my point of view, I'm just incredibly grateful we did what preparation we've done, so that we were able to respond to this new demand. And I think there will be a bit of a split in the banks as we go forward, as there will be in other businesses, between those that adopted, you know, and took it seriously for some time, compared with those that are having to address it now in some hurry. And you know, we're about to launch an SME platform, which has been under consideration for a while, but we've, you know, the take-up of that and the interest in that is far greater than it would have been 2 years ago. Yeah. So I think the world has changed. There is absolutely no doubt.
So it was interesting. You mentioned preparation. You were glad you did. You put in place certain procedures or preparation or R&D, so you could respond to the demand that is there today because of the pandemic, or at least in part because of the pandemic. Do you now feel like it's imperative or more important to spend more of your time personally, R&D, so funds, in things like blockchain, which are buzzwords that have been thrown around in the past, or artificial intelligence to enhance customer experience, or whatever it may be? Do you think that takes a higher priority in your agenda?
Yeah, I think before, the sort of jury, you felt as though the jury was still out on a number of things. So, you know, we were not sure whether, you know, our customer adoption rate was strong enough to justify an investment in X, or, you know, is there really somebody that wants to use Y? So we were quite open to the technology ourselves, and we started a couple of years ago using robots in regular automated in some of our processes that we could automate easily, and that gave us a lot of experience that we could then turn into something meaningful from a customer perspective. But at the same time, we were always a little bit reluctant to push too hard, because customers just wanted to carry on doing stuff the way that they'd always done it. I mean, I don't know your business, and maybe I shouldn't ask, but you know, how much paper are you moving around, and if so, why? You know, it's just no longer necessary. And we can give you now a technology base that you can latch onto and use for blockchain, if that's what if you believe that will help you. We can use other payment platforms. We can use social media platforms, you know, and use them in partnership with different customer groups to create all sorts of things that were not possible 3 or 4 years ago. Yeah. And I think we have the confidence that this has an audience, whereas 2 years ago or a year ago, when we had the technology, we just couldn't find anybody to talk to. Yeah. lots of young people with bright ideas, but nobody that would actually want to apply it. That's changed.
Yeah. Andrew?
Yeah, look, there's been lots of talk around sort of the fourth industrial revolution, which is all around sort of technology and AI and biosciences, etc. But I think what this pandemic has done has literally accelerated that at almost light speed. So if we look at it in the technology space, whether it be in terms of sort of the velocity, the speed of change, the scope of change, in terms of the breadth of what's been covered and introduced technology-wise, the systems impact, has basically brought a fundamental change to everybody's daily life. If we look at people like online shopping, online banking, some activities that people before would be like, actually, no, I like going to my branch, or I like going to the shopping mall or whatever else. People, many have made that switch. And if I look at my own organization, Barclays, I mean, we've got about just over 70,000 employees globally. At one point in time, 60,000 were working from home, and the bank still ran. So it still operated. And some of the stats, I think we processed, something like 60,000 loans in a period of 6 weeks, which historically would have taken about 12 months to process. And I think what's also come about with this pandemic, and the reason why we've been able to condense those sort of trade cycles, is people have just become far more agile in their thinking. And there's been far more sort of accommodating of the change, rather than, oh, but what about this and what about that? It's like, look, guys, we've got to do this, because actually we've got to get these loans out the door. Because if we don't get the loans out the door, these small businesses, I'm talking from a UK perspective, they're going to run out of cash. So it was all about speed to market. And a lot of the bureaucracy that has existed, I think, has been challenged and eradicated as a result of this. And I think if we bring it back to the UAE or bring it back to Dubai, I think where Dubai again has been either fortunate or very clever, or a combination of both. The whole e-government, smart city agenda, which has been going on for several years, has played out really well, because when government agencies then had to close their doors for a period of time and work from home, the city didn't grind to a halt. A lot of those activities were still able to be conducted online. So it's getting back to sort of public sector, private sector. I do think Dubai works very well in terms of the two being very aligned in terms of their agendas.
Yeah. I think, can I just add that the interesting thing is it's sort of coincided, or this sort of shift in user acceptance has coincided with the movement of some of these sort of digital technologies from quite big ideas and lots of fintechs trying to make themselves a fortune by applying them to a large scale market, and that it leaves a lot of people feeling quite detached and not really engaged in that sort of exercise. And then you can now get you talked about blockchain, but you can now get certain technologies working together that creates a very tactical solution. So if you still write out a ticket every time you receive a supply from a supplier, we can automate that relatively easily, and it's no longer a big exercise. It no longer requires quite the expense or the investment, and we can do that and make that part of the payment cycle. So it's moved. The pandemic has created this need to allow things to be done remotely or automatically or with much greater ease and much less paper. And the technology is developed now to the point where we can cheaply adopt it in tactical solutions. And I think this is what was looked as though it was going to take us 3, 4, 5 years to achieve. I think we'll have examples before the end of the year.
Yeah. So just out of personal curiosity, you both mentioned working from home and the reduction of the need for someone to come to the office. What do you think, because I've heard many banks say the same thing, and many institutions, this includes us as a business as well. How do you think this will influence commercial real estate and the need for and the demand for an office, so to speak, at least for large institutions such as yourselves?
Yeah, we make them skating rinks. I think it's a very interesting point. For sure, at a macro level, the demand will change, and they will be repurposed, and you'll have a lot more space than we're used to. Your commute for the West, the whole commuter experience is going to change incredibly, and you do have to question the likes. What's going to happen to somewhere like Canary Wharf in London, or where it's just a business centre that's no longer got a purpose. But that doesn't change the reality around some things will always be better done face to face, and it's a bit like the education system. It all moved to remote learning for a while, but nobody wants that to be the permanent solution. Now, a blended approach, or using the best elements of one model and aligned with the best elements of the other model, is probably where we're going to end up. So I don't see a complete collapse, but absolutely, we have to rethink all of these ideas.
So at NBF and Barclays, do you both have your entire workforce 100% present in the office at the moment? How does it look at the moment?
No, we've currently got about 20% in the office at the moment. 20, not more than 25%. We're looking to move up to 50% in September once the schools return, and we're not likely to go above 50% in 2020.
Yeah, we're about 60, but that obviously, in terms of the comparison between the two organisations, we have a few more branches, and it's very difficult to run a branch at home. not everybody's got room in their fridge for the cash and the gold bars and such like. Although a few have tried. So I think we don't see getting back to 100%, and we've already sort of established very clear policies for part-time working, home working, just to create a lot more flexibility in how people get through their jobs in the bank. And I think that's just the beginning.
Sure. So I think we've now reached the end of our questions, and would love to open the floor up to the audience for some of this. We've got lots coming through. So Lovraj, I think, would you like to start off with the first one?
Yes, I have an interesting question for Vince from Charles Douglas of Musgrove Bank.
Yeah.
He says, in view of the latest developments in terms of pandemic and the economic as well as financial repercussions, are banks still in favor of lending to operating entities based solely on their cash flow? Or on the other hand, the conservative, sometimes labeled old-fashioned lending based on cash flow, collateral and market reputation, name lending, etc. And he goes on to add one more point to the same question, and which sectors of the economy banks would be targeting?
Surely he has the answer. I think we're clearly going to go through a period of just reassessment around credit appetite and risk appetites. And there isn't one answer, in the sense that if you've got a very strong cash flow and it's coming from a payer that's undoubted, and you know that the guy that you're dealing with is also undoubted in terms of his ability to perform, then maybe we'd still be quite happy to deal with that on a cash flow basis. And I think there is still capacity and room for that sort of business, but it will be a lot less relaxed than it has been in the past, when the economy has been much more buoyant and with the banks have been much more competitive. I think businesses need to decide who they can really work with closely, much more closely than perhaps in the past, and who do they need to be a little bit more wary of, because banks are all going to readjust their own portfolios, and that inevitably creates also a bit of a liquidity squeeze if if 6 of your 8 banks all say, okay, we've decided to exit this industry, can we have our money back? Then that puts a lot of very good quality businesses in deep trouble. And we have seen that before, and I think that's a real risk. So we've got to make whatever adjustments we need to make very carefully. But I think it's inevitable. The shareholders are going to want the banks to take care of their capital. I think
which sectors of the economy would the banks be targeting?
That's the ones that we see moving quite strongly, despite everything, and some surprises in this. I think one is actually contracting for the right promoter is actually still doable. Obviously, there's interesting investments on energy happening in the country, on technology, on defence, a lot of still government-related infrastructure projects. I think some elements of the trading business are still quite strong. It was interesting that because when China came out of their lockdown earlier than most, we actually saw a big increase in the trade finance business. So there are pockets, but obviously some of the traditional areas that look a little bit oversupplied or look as though they're going to have to go through some adjustment are, in the short term, tourism and hospitality. And I think the education and healthcare sectors will have both good and bad elements. So, I don't see a whole major upturn or sort of turnover in terms of where life is going to be interesting, but I do see some quite big shifts that are going to have to take place.
Great. So I'm sure Charles will be satisfied with your answer.
I hope I haven't given him any clues, really. If you want some business, you can come and give me a ring.
And Andrew, do you want to say something more about this?
No, look, I think Vince asked it all. Our business model is slightly different to that of sort of the local banks. So we generally support multinational corporates. So ours are global relationships rather than local relationships. So I think Vince has said everything I would have said.
Right. So Yuvraj, you have another question from the audience?
Yeah, let's move on to the next question. So from Janet Miranda, we have our second question, and I guess it's a relatively, everyone will be asking this question. Since Dubai was expecting around 20 million visitors to boost the economy for the Expo, that now won't be possible, at least presumably so, due to the pandemic. Which industries do you think, apart from the obvious, will suffer the most with this decreased footfall in the short and the long term?
Wow.
I'm not sure that it's as I say, I go back to this idea of which side of the coin do you want to think about, and if you're a half full type person, then I think you can make a clear case that actually by the time we get to Expo, everyone in the whole world will be so desperate to travel. This will be a major party, and then we don't need to worry. Or you can be the sort of half empty and getting emptier and think that we're going to have a real problem and the world is going to become incredibly insular. No one's going to travel. No one's going to be allowed to travel. And so no one's interested in doing trade with each other, in which case, we will have a bit of an issue. But I actually think the former is far more likely than the latter. Now,
absolutely. Yeah, I think so. I think you're right.
A lot of time, and there's got to be a lot of changes between now and then, but that is far enough away that I do think it's possible. I think it's still a possible outcome to be very positive.
Absolutely.
Andrew, anything to add to that?
Yeah, look, I think it's the number of visitors. So I think the number of 20 million or 25 million. The view was 70% of those would be coming from overseas. My hope is that by October 2021, when the gates swing wide open, a vaccine will have been found then. The pandemic will then be history. Yes, there'll still be the economic repercussions, but hopefully it can be a celebration, an opportunity for the world to travel and then come back together. And I think if there's any location in the world that's very good at marketing and promoting and positioning, Dubai is incredibly good at all of those. And I think maybe that the extra sort of 14, 15 months we're going to have, and given what's going on globally, it could be positioned as in inverted commas, almost like a global party in terms of coming together. I do think one thing we've got to be mindful of is that Expo was about, or is about, nations showcasing themselves. And my hope is that Expo is still successful, encouraging the wide number of countries it was looking to encourage to showcase. I do hope that, picking up on Vince's point about people becoming insular and becoming very sort of inward looking. I hope that those countries that were looking to showcase themselves at Expo still continue to look to showcase themselves, sort of 15 months from now. They don't lose that interest or that appetite.
Got it. Thank you. I think that answers the question pretty well. So our second question, or our third question, is from Kapila, if I'm saying that correctly, in Abu Dhabi, who asks, once this is over, how do you think banks will move forward with supporting clients with working capital related lines, having overdues parallelly, since most of their clients are in non-essential areas, are recovering at a very slow pace, but rely on bank support will drag these businesses down more. Unless banks hold the umbrella with CB backing, turning around will be a long shot. I guess that's more a comment than a question, but if anyone wants to, you get the gist of it.
Yeah, I think the challenge for the government and as well as the banks and the private sector is, and it's not just, this is not a UAE issue, is at the moment we're sort of, we're working to regulatory structure and in particular accounting standards that were never designed for a pandemic. So they're creating a bit of a limitation and major constraint on how flexible we can afford to be. But when I look at most of the worst case scenarios as to sort of what might happen even across the business sector, actually the impact is clear on profitability of the banks. But actually the capital base of the banks is sufficiently strong to be able to withstand what we can see as being a likely scale of challenge today. Of course, that might be wrong. We may, that may be a huge sort of underestimation, but that's where we are today. If that's true, then if it's true that capital is sound, but profitability will take a hit as troubled customers come to the surface, then actually banks will still need to do business because we will have our eyes on the future and we will be wanting to generate a return on the capital that we have from our shareholders. So I don't think there should be any fear of capacity. It's much more a question of where do you use your capacity and what business is available to you in order to support the economy. And we're all aligned. We all want our customers to do well. And the challenge comes when if a whole of a sector goes pear-shaped, then how do the banks on their own can't bring them back to life. And it's a much bigger issue, which I think between the government, the central bank and the banks, we are alive to, and there are plenty of discussions. Andy and I attend numerous conversations with roundtables and workshops on how do you support the economy during these sorts of periods, and it's happening in every country across the world. So I'm sure you will see over the next 6 months further support, further changes in the regime that are designed to keep a buoyant economy.
Yeah.
Yeah, look, I think, yeah, it's if we look at how banks behaved after the financial crisis, the reputation of banks suffered because their behaviour was almost detached from the communities in which they were operating in. So it was all about, we need to look after ourselves at the expense of everything and anything else that's around us. I think banks learned a lot and have learned a lot in recent years, that actually, banks are part of the community and need to be, and play a key role in that community and ensuring that they support it. And I think to Vince's point, certainly we as the banks are working very closely with the government agencies and the central bank, to ensure we're all doing the right thing in the right way, and that everybody is in lockstep moving forwards to provide that support. The reality is, banks are never going to lend money to businesses that are going to fail. It's the sort of Darwinian theory in many respects. Is the survival of the fittest. If you've got a bad business before the pandemic, why is it going to be a good business coming out of it? But what I think is important is that the banks are working closely with the authorities to help collectively achieve the right decisions for the communities they operate in.
Yeah, I think that'd be very insightful for a lot of entrepreneurs watching, a lot of business owners watching. So just moving on to the next question, because I think we've got 3 more to cover. So I'm going to just move swiftly through them. Naman asked, how much will travel restrictions affect the turnout at the Expo? I don't think any of us know. So if any of you have any additional comments.
Who knows?
If Naman knows what the restrictions will be next year, then I'd like to hear them.
Yeah.
Lakshman asks about digitalization in the banking community. I think we've touched upon that already in our last question. So Gautam asked an interesting question. Does the panel believe that the stimulus packages have actually resulted in a reduction of cost of living?
Have resulted in a reduction in the cost of living?
I guess the other way to put this is, as a stimulus package trickled down to the general population living here, giving them a break in expenditure or whatever it may be.
I can think of specific cases where that's definitely true. Inevitably, it doesn't reach everybody, and different people need help in different ways, really. So I think, as I said, really the government has done what it can in the sense of the revenues that the government they've reduced or delayed or deferred to quite a reasonable extent. Obviously, what's missing is a direct injection that you've seen in some markets. So, in the States, businesses were able to sort of sign up for a check, and it went straight from the government to the business. Not everyone has done that, but that has been a feature in some countries. I think the relief structures that have been talked about that came via the banks are largely deferral in nature. So we've been given capacity, if you like, to say to someone, okay, if you have a loan repayment due in April, make it in October, and not charge any additional penalties or interest or whatever for that deferral, and hopefully give that person time or that business time in order to generate the cash to make the payment. So the assumption has always been, hopefully that period will be long enough and the business recovers and the cash returns. I'm sure if that's not true, or there has to be a follow-on mechanism. There can't be a sort of drop dead date to that support, but we're not there yet. So I'm sure that's a topic for discussion that is currently underway as we speak.
I hope that answers your question, Gautam. Andrew, anything to add to that, or should we move on?
No, Vince has covered it. Thank you.
Okay, so the next one is from Mohammed Faisal, who says, thank you to all the hosts for this amazing talk. But my question is, keeping in mind the current situation, what do you think will happen to the market of luxurious goods and services? For example, the automobile market As we all know, Dubai is also known for the best automobile market in the world. I'm not sure how true that is, but in the next coming 2 years or so. So luxurious market, what do we think the future of that is?
I think, yeah, people have had a period of time to reflect during the pandemic in terms of how they spend their time, how they spend their money. We've talked about the economic implications in terms of, increases in unemployment rates, job insecurity, etc. So I think as a consequence, people will be consumers will be far more selective as to how they choose to spend their money. And I think I don't know the exact stat off the top of my head, but I think in the UK, I think I get the data from Barclays. I think in the month of April or May was the highest rate ever in terms of repayment of debt on things like credit cards and personal loans and whatever else, because people then suddenly switched saying, I just need to get rid of my personal debt. So to answer your question, I think the luxury goods sector is a sector that's going to feel some pain because it's an area where it's a luxury. And I think if people are questioning their expenditure, the luxuries are the first ones that get crossed off the list. So I think in terms of the high-end automobile industry and high-end luxury sector, I think it's going to be very challenging, very, very challenging.
Got it. Great. So I think I hope that answers your question, Mohammed. I don't think we have any more. So I think I'll take this opportunity to sort of wind up. Just as we said, Andrew, Vince, before the start of this conversation, you asked me what opted us to start Terrazzo Talks. I just want to touch upon that before we finish. I think a lot of the population, the professional population across the city, their news source is really just newspapers, local news. And they don't really have access potentially to people like yourself, Vince and Andrew. So I think the idea is to allow people who have questions, who want more information, to interact with decision makers such as yourselves who do influence the macroeconomy on a daily basis. So that really was the purpose of this talk. So I hope our audience has got the value that they need. I hope you guys have had an engaging conversation. I personally have very much enjoyed this. So I think that's all the time we have here today. And it really was a privilege for myself personally, and I'm sure Lovraj would say the same, to moderate this incredible conversation. So Andrew, Vince, honestly, thank you very, very much for being a part of this very first inaugural edition of Terrazzo Talks. We will come to you again next week live on Wednesday, the 19th of August, with another set of distinguished panelists in Olivia Crasson, if I'm saying that right, and Nelson Gibb, the leading figures behind Six Construct and Dutco, so the two largest contracting companies in the region, whilst we discuss the construction sector and whether the construction sector specifically can sustain its momentum going forward. So just another easy question to answer there. So with that, I guess thank you all very much for being a part of this talk. Depending on what medium you're watching us on, whether it be YouTube, Zoom, Facebook, share, like, subscribe, and follow us on all our various social media handles, which should appear in the link below when this video is reposted to YouTube and should be in the description. So on behalf of everyone here, thank you so much for being with us. Unless any of you have any comments, I think we can sign off.
Cool. Excellent. Cheers, guys. Thank you very much.
Thank you very
much. Thank you, Vince. Thank you, Andrew, for your participation and for being with us on this inaugural session. Look forward to seeing you on the panel once again soon.
It was a pleasure, Lovraj, and good luck with the series.
Thank you very much.
Cheers, guys. Thank you very much indeed. Take care. Bye-bye.
Thank you. Take care. Bye. See you.